The global economy is at a crossroads. Inflation remains stubbornly high, interest rates are rising, geopolitical tensions are simmering. In these uncertain times, investors are increasingly turning to a familiar safe haven: gold. Gold has been a store of value for millennia. It's a tangible asset with intrinsic worth, and it has a proven track record of preserving wealth during periods of economic turmoil. As we navigate the complexities of 2024, gold is emerging as a beacon of stability. It's a hedge against inflation, a safe haven from market volatility, and a strategic asset for portfolio diversification. While traditional markets fluctuate, gold stands as a symbol of enduring value. This essay will explore why gold, particularly gold stocks, presents a compelling opportunity for discerning investors. The winds of change are blowing through the investment landscape. After years of exuberance in the stock market, a sense of caution is taking hold. Investors are grappling with the reality of persistent inflation, rising interest rates, and geopolitical uncertainty. This shift in sentiment is driving a renewed interest in safe haven assets, with gold emerging as a prime beneficiary. The Federal Reserve's aggressive interest rate hikes, while aimed at taming inflation, have injected a degree of fear into the markets. The specter of recession looms large, prompting investors to reassess their risk tolerance. Adding to the unease is the ongoing conflict in Europe and escalating tensions in other parts of the world. In this climate of uncertainty, gold's allure as a safe haven is undeniable. While the price of gold itself is showing signs of strength, a compelling opportunity lies within the gold mining sector. Gold mining stocks, often overlooked by mainstream investors, are currently undervalued relative to the underlying metal. This discrepancy presents a unique opportunity for investors seeking leverage to the rising gold price. Gold mining companies have spent the past few years streamlining their operations and reducing debt. They are now leaner, more efficient, and better positioned to capitalize on rising gold prices. Furthermore, many gold miners are sitting on vast reserves of gold, yet to be extracted. This untapped potential adds another layer of upside to the investment thesis for gold stocks. Inflation, the silent thief of wealth, is a persistent threat to investors. As the cost of goods and services rises, the purchasing power of fiat currencies erodes. Gold, on the other hand, has historically held its value against inflation. In fact, during periods of high inflation, gold has often outperformed other asset classes. This inverse relationship between gold and inflation makes it an essential component of a well-diversified portfolio. While other assets, such as stocks and bonds, may struggle to keep pace with rising prices, gold acts as a ballast, preserving wealth and providing a hedge against inflationary pressures. As inflation remains a concern in the current economic climate, gold's role as an inflation hedge is more relevant than ever. Section 5. Diversification, shielding your portfolio with gold. Diversification is a cornerstone of prudent investing. By spreading investments across different asset classes, investors can reduce their overall risk exposure. Gold, with its low correlation to traditional assets like stocks and bonds, plays a crucial role in portfolio diversification. When stock markets experience volatility, gold often moves in the opposite direction. This negative correlation acts as a shock absorber, cushioning the impact of market downturns on a portfolio. By including gold in a diversified portfolio, investors can potentially enhance returns while mitigating risk. In an environment of heightened uncertainty, gold's diversification benefits become even more valuable. Section 6. Central banks speak. A vote of confidence in gold. Central banks around the world are sending a clear signal. They are accumulating gold at an unprecedented pace. In 2023, central bank gold purchases reached their highest level in over 5 decades. This surge in demand from the institutions responsible for managing national reserves speaks volumes about gold's enduring appeal. Central banks are motivated by a desire to diversify their reserves away from the US dollar and other fiat currencies. They recognize that gold, as a tangible asset with intrinsic value, provides a level of security and stability that fiat currencies cannot match. This growing demand from central banks is a testament to gold's enduring role as a monetary asset and a store of value. Section 7. The Contrarian's Choice Gold Stocks in 2024. Contrarian investing is about identifying opportunities that are overlooked or undervalued by the market. In 2024, gold stocks present a compelling contrarian opportunity. While the broader market grapples with uncertainty, gold is poised to shine. And gold stocks, with their leverage to the gold price, offer the potential for significant upside. Investing in gold stocks requires careful research and due diligence. It's essential to focus on companies with strong fundamentals, experienced management teams, and a proven track record of profitability. Look for companies with low operating costs, a healthy balance sheet, and a commitment to shareholder value. Section 8. Navigating the gold market. Investing in gold can take various forms, each with its own risk and reward profile. Investors can choose from physical gold, gold ETFs, gold mining stocks, and gold royalty companies. Physical gold provides tangible ownership but incurs storage costs. Gold ETFs offer exposure to the gold price without the hassle of physical storage. Gold mining stocks offer leverage to rising gold prices but come with operational risks. Gold royalty companies provide exposure to gold production without the operational risks of mining. Understanding the nuances of each investment option is crucial for making informed decisions. Section 9. Conclusion. Golden opportunities await. The world is changing, and with it, the investment landscape. Traditional assets are facing headwinds, while gold is emerging as a beacon of stability and value. Gold stocks, in particular, offer a compelling opportunity for contrarian investors seeking to capitalize on the current economic climate. As inflation persists, interest rates rise, and geopolitical tensions simmer, gold's allure as a safe haven and inflation hedge will only grow stronger. Now is the time for investors to consider the potential of gold stocks and position themselves for a future where gold shines brightly.